There's a really good chance you've got something made by this company sitting in your kitchen right now. Today, we're going to pull back the curtain on General Mills. Yep, the giant behind some of the most iconic food brands out there, to really understand the story they just told the world about their performance. Okay, let's dive in. It all really starts with what we know, what's familiar. I mean, think about it. That little O from a box of Cheerios? That's just the absolute tip of the iceberg. Betty Crocker, Nature Valley, Old El Paso. Yeah, these are probably in your pantry as we speak. And it doesn't even stop there. You know that incredible smell of Pillsbury cinnamon rolls on a weekend morning? That's them too. This huge portfolio of brands is the very foundation of the company. But how's that foundation actually holding up right now? Well, that brings us to the news. General Mills just dropped its latest quarterly results, and the main numbers, they tell a pretty fascinating story about the challenges they're up against. So here's how the CEO, Jeff Harmening, put it. Strong execution in a volatile operating environment. Now that's some classic corporate speak, right? It's basically saying, hey, things are kind of crazy out there, but we're handling it. So let's see what that volatility actually looks like in the numbers. So first up, the first key number. Organic net sales were down 1%. Now, by itself, that's not some massive red flag, but it's where the story begins. But here's the number that really makes you go, whoa. Adjusted operating profit, down a steep 20%. This is the figure that really grabs your attention. It means that while their sales just dipped a little bit, their profitability basically fell off a cliff. So the big question is, why? Was it because ingredient costs went through the roof? Or maybe they had to spend a ton of money on discounts just to get people to buy things? That's the mystery we really need to unpack. To figure that out, we have to look past those big headline numbers and see what's actually happening in their biggest market, North America retail. This is where we all come in, the everyday grocery shoppers. Okay, before we go any further, we need to get our heads around this key term, pound share. Seriously, just forget about dollars and cents for a second. This is all about weight. It's measuring how many pounds of cereal or yogurt or cookie dough a company is selling compared to its competitors. It's a pure measure of volume. Are people literally putting more of their stuff in their shopping carts? And this is where that whole pound share idea gets really interesting, and you start to see the paradox. So even though their profit dropped, they actually grew their pound share in 8 out of their 10 biggest categories. Think about that. They're making less money overall, but they're selling more stuff by weight. And this chart just illustrates that turnaround perfectly. You can see the trend so clearly. See that bar on the far left? That represents last year, and their volume was shrinking. Then, the next quarter, still shrinking, but not as bad. And now, that bar on the right is back in positive territory. The ship is slowly turning around. So, if the main business, selling food to people, is starting to level out but not exactly taking off like a rocket, where does a huge company like General Mills even look for its next big wave of growth? The answer is our furry little friends. The pet food business isn't just some side project for General Mills. It's a huge, central part of their strategy for the future. And trust me, they are betting big on it. At the very heart of this whole strategy is their Blue Buffalo brand and its really powerful tagline, love them like family, feed them like family. This isn't just about selling bags of kibble. It's about tapping into that incredibly deep emotional bond people have with their pets. And here is exactly how they make their case. This slide is straight out of their own presentation. On the left, you see Blue Buffalo's top ingredients, deboned chicken, brown rice, oatmeal. Then on the right, you see a competitor's. They're making a really direct argument here about quality, betting that pet owners will actually read the label and choose what looks like the healthier option. And they are not just sticking to dry food either. They're innovating with new stuff like this Love Made Fresh line, which is a refrigerated pet food. This is a massive trend right now, moving pet food to be more like human food, and they are jumping right in. So we've seen the products, but how does the company connect all these dots? Well, their whole strategy really revolves around this one big idea, creating remarkable experiences for all of us. So what does remarkable actually mean to them? They break it down into 5 steps. It all starts with having a better product and telling a great story about it. Then you got to make it pop on the shelf, offer a good value, and finally, make sure you can buy it absolutely everywhere, whether you're in a store or shopping online. Of course, creating all that remarkability, that costs money. So how do they pay for it? Well, this is where another one of those corporate terms comes in. HMM, or Holistic Margin Management. To put it simply, it's a giant company-wide program to be more efficient. They find ways to cut costs in how they make and ship things, and then they take that cash and reinvest it into those 5 pillars we just talked about. And they're getting even more aggressive with it. If you look at their history, they've saved about 4% of their costs with this program. This year, they're aiming for 5%. Now, that extra 1% might not sound like a lot, but for a company this massive, it frees up a ton of cash to pour back into growth. All right, so we've looked at how they did recently and what their game plan is. So, what does this all mean for the rest of the year? What is the company actually telling investors to expect? Here it is, the official outlook, and they're sticking to their original forecast. They expect organic net sales to land somewhere between a 1% drop and a 1% gain. And they see that big dip in profitability ending the year somewhere between down 15% and down 10%. Basically, they're saying, hey world, the second half of the year is probably going to look a lot like the first. And that really leaves us with the big final question. General Mills is a company built on these absolute classic iconic brands. But in a world where what we want to eat is changing all the time, the ultimate challenge is this. Can they actually use their strategy to convince a whole new generation that these pantry staples aren't just familiar, but that they're truly remarkable?